So guys, welcome back to my channel. What's going on? Hope you're good. Alright, so in this video I'll be exposing another secret to you guys, and I'm going to be focusing on candlestick patterns, okay, or candlesticks. Now a lot of us are using candlesticks for our entry or for confirmation or anything. Maybe you might really have candlestick as your strategy, so I think there is nothing wrong with that, okay. But for me, I use candlesticks for confirmation or entries, okay. So what it means is that I basically have a setup, okay, or I have a strategy. Then I use candlesticks for my entry, okay, to confirm my entry point, or my maybe seeing some weeks for my exit, right? Okay, so if you look um right here, I want to share this. So before I'm going to be using boom and volatility for this, okay. The first thing we want to check out is on boom and crash, okay. So if you trade boom and crash, there is something you need to understand about candlesticks. If you must use candlesticks on boom and crash, you should only use candlesticks from 1 hour time frame, guys, okay. 1 hour time frame, okay. You should check 4 hours time frame, or maybe you want to use daily time frame. So this for me is the time frames you are to use if you want to check candlesticks pattern. If you want to use candlestick maybe for your entry or for your strategy or for confirmation, anything you are doing on boom and crash, as long as candlestick is concerned, should be from 1 hour time frame to maybe daily time frame, okay. You should never use maybe 15 minutes, okay, time frame, or 5 minutes time frame, or maybe 30 minutes time frame for your candlestick pattern, guys. This is no. Please never you use these time frames for candlesticks when you are trading boom and crash, guys. I mean boom and crash. You can do this maybe using 15 minutes, 30 minutes, or 5 minutes, maybe on volatility, currency pairs, or anything, step index. But when it comes to boom and crash, please don't use. What I'm saying is, I know what I'm saying, and I've traded boom and crash for a very long time. I know what I'm saying. So for me personally, I will never use uh, candlesticks pattern or candlestick on lower time frame from below 1 hour. Anything uh, less than 1 hour, I am not going to be using uh, candlestick pattern, okay. I will use maybe chart pattern or other stores to maybe indicators, anything for my confirmation of my entry. So this is very important, okay. So if you look right here, let's say we want to check entry point. Let's say from here the price is pushing, we want to see reversal. Looking at this point, this is 1 hour time frame. If you mark out candlestick patterns at these swings, you are going to see that they are kind of effective, okay. The reason is because it's 1 hour. If you go to 4 hours also, you will see that candlesticks, both the wicks, when you have wicks, when you have and bearish engulfing, bullish engulfing, morning star, evening star, doji, any of them, they work perfectly well when you are using them on a higher time frame, guys, okay. When you are using them on a higher time frame. But if you dare use these particular candlesticks on a lower time frame, you are not going to be getting a good result, guys. So if you must use candlesticks on boom and crash, I mean boom and crash, please make sure you are using that on a higher time frame from 1 hour to 4 hours to daily. If you look closely right here, if you know your candlestick very well, you can see we have this bearish engulfing. So after that bearish engulfing, the price drops to the downside, right? If you look here also, we have this morning star After that, the price push a little bit to the upside, but you should know that if you are trading candlestick pattern, it should align with the trend. So you shouldn't be taking this kind of trade right here, even though you have that pattern, but it's against the trend. That means you can only take it if you are scalping. You are not taking, you are not wasting time. You just, pick some trade and you are out, right? Some pips and you are out. But look at the kind of entry you want to make using that bearish engulfing, right? One of the best candlestick pattern. I will also reveal it to you guys, okay? For me, the best candlestick pattern to use on boom and crash. All right. So if you go down to 15 minutes time frame and you want to, first of all, it's going to be difficult for you, right? So when you see, let's say, let me just pick any candle. Okay, let me use this one for example here. If you look here, you are going to see this. Will you just call this a bullish engulfing candlestick pattern? We just call it a bullish engulfing. The spike affects the candlestick pattern on a lower time frame, guys. Okay, the spikes we always, most of the, that is the spike we always engulfs, or bigger. You have these bigger bullish candles on the lower time frame because of spikes. So if you are using candlestick pattern on 15 minutes time frame, 5 minutes or 30 minutes time frame, you are wrong, guys. I think this is my own take. Okay, it's not like it's composed, it's not like, sorry, it's not like it's general. So this is what I've observed, and I think you should check it out yourself to confirm what I'm saying. You should avoid taking candlestick pattern on lower time frames on boom and crash. If you must do that, you can actually do it on volatility, step index, currency pairs, and every other stuff. But on boom and crash is no for me. Okay, if you want to take uh, uh, learn from the little I know. Okay, I think experience have taught me that I don't do that mistake. Okay, so for me, the best candlestick pattern to use on boom and crash, okay, the first one for me is the bullish and bearish engulfing candlestick pattern, guys. Okay, for me that's the best. Either let's say the price is pushing up, and after which the price will be engulfed with uh, a bearish candle. So this is bearish engulfing. And the best one for me is when you see this bearish engulfing and you also see a wick, okay, a wick on that bearish candle. Okay, you can see the how it look like. So this for me is the most effective, okay, most effective when it comes to candlestick patterns on boom and crash. This is my number one. Okay, this is my number one. This is my number one, guys. Okay, after this we also have the doji. Okay, you still have the doji, the indecision candle, anything depends on whatever. So just have a candlestick like this. Okay, you might have small wick to the upside, anything. Then after that, if you get, let's say that is a bearish candle, or this yeah, if you have that as hanging man, anything, maybe you now uh afterward have a bearish engulf in this way. Okay, or you see a doji, and at the end of the day you also have bullish engulfing, any of them. But doji is for reversal, it's like indecision or anything like that, depending on how the doji form. Okay, you have the gravestone doji, the dragonfly doji, but you can name it, you can call it anything, but just understand the concept. Doji is for reversal, is an indecision candlestick. So you need to you can go through different candlestick patterns and know the one that is best for you, but I'm just telling you the one I use most. Okay, I have the doji, bearish and bullish. Okay, I have uh, my number one is bearish and bullish engulfing. Then remember, this is bearish. Okay, you can check out the bullish one, it's just the same thing, that is the opposite, right? Then the last candlestick pattern that I use a lot is the morning and evening star, right? When you have, let's say, um you have bullish candle this way, then maybe a little bit bullish candle, sorry, it could be bullish, it could be bearish, but let me just use bullish for example. Then maybe have some wick here. Okay, then after that you now have bearish engulfing from here to the downside. Okay, so basically you just want to see this particular candle should be, these two, candle 1 and candle 3 should be bigger than the candle in the middle, right? So that's exactly what we want to see. So this is like is evening star, right? It's a reversal pattern. So if you have the price pushing to the upside and at the end of the day form this reversal candlestick pattern, you are likely going to be selling from here. Okay, that's for the opposite is the morning star, guys. Okay, the opposite is the morning star. So if you must use candlesticks, okay, on boom and crash, you should go for a higher time frame, okay, like 4 hours, 1 hour, and daily candlestick, daily time frame. Okay, so I want to share another thing about candlestick with you guys. Okay, this one is very interesting. Okay, now if you want to take let's say you're on volatility uh, 75 and you are looking for candlestick pattern, please and please, please and please avoid consolidations, or when the price is creating structure, avoid candlestick pattern. Some of the mistake that most of us do, you know, people will come here and they start looking for candlestick pattern at this zone. You can't be looking for candlestick pattern at this zone or this kind of market structure, right? Because there is no movement, there is nothing. So any candlestick pattern you are seeing here is not going to be giving you results. You can see here you had a lot of candlestick pattern. You had this reversal right here, which is the evening star. Okay, you still have the bullish engulfing, which is right here. You will get even bearish engulfing too, okay, like this one here. Okay, you have all this candlestick pattern, but the price is not making any move. You don't look for candlestick pattern when the price consolidating, right? You want to see a move, a strong move first. Let's say the price is down, you just see move this way to the downside. At this point is where you now start looking for maybe a reversal candlestick pattern, okay, maybe bullish engulfing at that point. Okay, now the price first have made some move, okay, to the downside. Now you are looking for reversal. At this point you can now start buying right here, because the price have made some move. So price is likely going to correct this move, okay, or reverse. So you don't want to be taking or looking for candlestick pattern when you are seeing the price maybe consolidating and you are looking for candlestick pattern at this zone. This is the mistake a lot of people do. So for the fact that candlestick pattern works, there are some places or market structure or price movement you should avoid looking for candlestick pattern, right? Because you are not going to be getting that move. So if you pay close attention to what I'm saying, like what the chart is doing right here, once you have this kind of move, you can see this is a move, this is a move, this is a move. You see the price moving, okay, consolidating here. You are not paying attention to that. So once you see consolidation, okay, you are not paying attention to or looking for candlestick pattern to take trades when the price is consolidating, right? You need to see a big move first, something like this. The price move this way, the price drop this way, the price move up. That is when you are looking for candlestick pattern. First you want to see a movement, okay, first, before you start looking for patterns. Unless if the price is consolidating and you are busy looking for patterns when the price is consolidating, you are likely going to, stocking, price will push you into profit and hit your stop loss, push you again, hit your stop loss, push you again, hit your stop loss. That's consolidation for you. So you don't look for candlestick pattern when the price is consolidating. Rather, when the price have made the move, pull back and you start looking for patterns to trade. Okay, now if you look from here, let's just use this this side as an example. Okay, the price made a move. Let's say from here the price dropped to the downside, right? And the price is pushing back a bit. So at this zone you can look for candlestick pattern. At this point you can look for candlestick pattern, right? That's exactly what you want to do. So if you zoom in from here, you can see we had a pattern right here. One, you have confirmed the trend. Second, you look for entry. This is bearish engulfing, right? So if you look also down here, you can still see bearish engulfing here. You can still see bearish engulfing here. This is the kind of candlestick pattern where you start looking for candlestick pattern, because there was a move to the downside, then the price retraces, okay, and then you start looking for entry. Then if you are using candlestick pattern, always pay close attention to trend. You can see I've already identified the trend. The trend is established to be a downtrend. So you are now looking for bearish candlestick patterns. So you are not interested in any bullish candlestick pattern, because you are now, if you go and start checking bullish candlestick pattern, you are trading against the trend. That means you are not going to be, making a lot of money, or you are likely going to be seeing a lot of fake signals, right? So you move with the trend. Is very, very important. So these are some of the secrets, okay, when it comes to candlestick pattern. If you apply this thing, if you just try to do this simple stuff, you are going to be seeing a lot of changes. Okay, so like this video before we proceed again or continue with this video. Just like the video already, drop a good comment and share. Okay, drop a good comment and share. So what I'm going to be doing is that, um I told you guys I'll be updating you guys on my robots, the robots I'm using, and I promise you guys I'm going to be developing one for few persons. Okay, and I saw some people is kind of leaving comments about the robots, which basically I'm probably going to be picking people from the comment section, okay, for the robots, right? So you can actually leave a comment about how you feel about this video and the robots. Okay, if you want me to be maybe faster about the development, or you don't like robotic trading, you just let me know about, oh, what is your thought about robotic trading. Okay, so I will be sharing with you the what the robots, the outcome of the robots so far. I told you guys I'll be updating you on the robots anyways. All right, so if you look right here, um um today today is today is 24th, and this is early morning 24th. Okay, the robot is already $3 into profit, plus minus. So let's check. Yesterday is 23rd. Okay, the robot made the highest money yesterday with no loss. Yesterday market was so good, so the robot made about $99. Okay, remember I loaded this robot on $100 accounts, right? So made $99, like 100% of the accounts, right? Then we push to 22nd. Okay, 22nd, the robot made about $12. Okay, we go to 21st. 21st, robot made about $56. Okay, you can see every trade placed by the robot. So we go to 20th. 20th, the robot made just $6. Okay, plus minus $6. We go to 19th. 19th, the robot lost about $25, right? So you can see that's the downside. So 18th, the robot made $43. I think I've shared other previous history of this robot. So that's how interesting robotic trading is. Once you have a good strategy, I think you can actually you know make a lot of money with robots. So if I go to last week, the summary of last week trade is about $57. Okay, plus minus from this robot. You can see all the trades are placed by the robots. So that's that for this video. I hope you enjoyed this, and I will see you guys in the next one. Remember, I don't do account management. I don't send signals, VIP signals. All the signals I send is free in my Telegram channel. So the link to the Telegram channel is in the description of this video, right? You can join for free. Okay, I don't do investment program, account management, signal, paid signal, and all that. Okay, so you can enjoy free signals in the Telegram group. Then, if you want to trade boom and crash, you are looking for how to trade boom and crash, you need to sign up with the Reef. Okay, so click the link in the description also to sign up with the Reef so that you'll be able to access boom and crash, volatility, step index, and all that. Okay, so that's that for this video, and I will see you guys in the next one. Bye for now, guys.